Robert Kiyosaki says that the richest country in the world is now bankrupt and the U.S. can't pay the interest on its debt. Here's how he's protecting himself. Now, there's a lot that I want to talk about and discuss here from the standpoint of where we are today and what some of these folks out here, these financial gurus and salespeople, are telling and selling you on a regular basis. I'm also sitting in a different position because I apologize if the glare on my last video was distracting. I didn't realize it as I was recording, and then when I watched it back, there was some glare. Hopefully that isn't a problem from this seating position, so we will carry on here. Now, it says that according to Bazinga, this one's Bazinga, in a recent episode of the Rich Dad radio show, financial educator and author Robert Kiyosaki expressed grave concerns about the United States' financial health, saying America is now bankrupt. And the question I want to answer today is, how come America, at one time reportedly the richest country in the world, is now bankrupt? ? While the U.S. hasn't legally declared bankruptcy, Kiyosaki's point underscores the nation's worsening debt crisis. As of November 24, the U.S. national debt had reached $33.8 trillion, and actual liabilities, including entitlements, could be as high as $200 trillion. Fiscal 2023 saw interest payments on this debt rise to $659 billion, marking a 39% increase from the previous year and nearly double the amount in fiscal 2020. Nearly double the amount in fiscal 2020. Now, it does say, so how is the famed author protecting his wealth? Or at least it asks the question. And he's a strong believer in physical assets. Here are two of his favorites. Now, we're going to talk about this in just a second. But when we see here that interest payments in 2023 saw a rise to $659 billion, marking a 39% increase from the previous year and nearly double the amount in fiscal 2020. I got to point you guys back to the video I just uploaded about the possibility of a repeat of our current Democratic presidential catastrophe. That's the only way I can really describe it. And the numbers don't lie. And the numbers don't lie while at the same time, he is continuously pushing to cut checks and send more funding and more aid to support conflict. I don't know if I can say the G word. YouTube's kind of weird about certain things. The G word, the S word, the P word. Again, this is why we have Patreon. And I got a link down below if you want to go to Patreon. Michelle actually put up a video there yesterday. And it has a lot to do with some of the attacks and the planning and the planned attacks against us that we were not able to upload to YouTube. It's crazy. But over on Patreon, she went all in. She didn't hold back, which I am so glad that she did. And honestly, I think based on the response and the reaction and the comments from folks over there, the members, and this video is available for all tiers. So if you're a member, go check it out. And let me know what you think. And she will be responding to a lot of those comments later. So make sure you go check it out. And so how is the famed author protecting his wealth? He's a strong believer in physical assets. Here are two of his favorites. Number one and two, gold and silver. Kiyosaki, who believes America's financial troubles began with the abandonment of the gold standard in 1971, advocates investing in gold and silver. He views the precious metals as safeguards against inflation and currency devaluation. The rising industrial demand for silver and the current low prices of gold and silver compared to historical highs make them particularly attractive. And he also values the fact that physical gold and silver do not carry counterparty risks, unlike many other investments. So there is a link down below if you want to invest in gold, buy gold. Feel free to use it. Next up on Kiyosaki's list is real estate. And this is going to be a touchy subject. And also, if you guys want to know or talk about gold, silver, hedging against not only inflation, but now a looming, pending national bankruptcy, then by all means, feel free, reach out, let me know. Real estate. Beyond precious metals, Kiyosaki is a proponent of investing in real estate, and he recently claimed to own 15,000 houses, which he leverages as an effective hedge against inflation. Historical data from the Federal Reserve Bank of St. Louis shows that while the consumer price index has risen by 896% since 1963, the median sales price of homes has increased by 2,353.93%, and rent is up by 892%. And this indicates that real estate not only keeps pace with inflation, but can also exceed it. That's huge. That's really important, because I think that when the time comes and it all comes crashing down, as I've mentioned and said before, holding assets is going to be far greater than anything else, okay? And these assets can include precious metals, gold, silver, real estate, intellectual property too. But essentially, if the medium of exchange disappears and just goes away altogether, you'll still have the asset. The new medium of exchange that is introduced will then be used to revalue or redefine the value of your assets. So if you have a home, excuse me, I'm trying not to sneeze here. If you have a home worth $500,000, $500,000, which I think is close to the average now, unfortunately, it's crazy. I feel terrible for first-time home buyers. It's a challenge. First-time home buyers starting a family, trying to get their piece of the American pie, it's a struggle. But if you got a $500,000 home and the dollar goes to zero and the country files officially files bankruptcy, you still have a home. You still have an asset. And it may not be worth $500,000. It may not be worth anything if the dollar disappears, but it's worth what it's worth, no matter what. So if at that point in time we decide to restructure the debt, and we see a change in what each dollar's worth, you're going to see an equal and opposite exchange on what your home is worth. If every dollar now is worth half of what it used to be, then your home will then be worth double or 50% more than what it used to be. So your $500,000 house is now worth $750,000 because each dollar doesn't go as far. So you would need more dollars to buy the same house. But the beauty is that you still own the asset. If you were sitting on the cash, now you need 50% more of that cash to get the same asset. You see what I'm saying? So holding the asset makes way more sense, especially with the possible direction and trajectory that everyone is forecasting for us to end up in just a short period of time. Now, rent going up 892% in comparison to the consumer price index going up 896%. Actually, that's kind of good, because it just means that it stays on track. Now if rent was over 900%, over 1,000%, then that means that, you are in a continuous losing battle paying rent, which we are currently. But it's also because we don't want to jump in to the real estate market at the worst possible time. And I can go into greater detail into that if you guys care to know. Kiyosaki's strategy aligns with the opportunities available to average investors through fractional real estate investing. And this approach allows individuals to invest in shares of income-producing properties for as little as $100 and enabling them to benefit from rental income and long-term appreciation without the traditional barriers of high cost and credit requirements. So this fractional share investment into real estate is no different than getting into stocks, which I do have a link down below in the description where you can get free stocks. And the reason why I even share this is because I would take the free stocks, and I would also be set up and ready to be positioned to capitalize on a growth opportunity, because we're already seeing how there's an expectation of a massive stock market decline in 2024. And then you can buy at a discount. This is not financial advice. This is just me thinking out loud. But getting free stocks is free stocks. So it's like, I don't know why you would pass up that opportunity. And to then use that same basic principle to get into fractional share investment into real estate is great, because let's just use the same $500,000 house investment or example as an investment opportunity. If you don't have 500K, or if you don't have the credit, or really, I wouldn't really want to use my credit to buy into a $500,000 house at today's interest rates for an investment. I would want to use my cash. But if you don't have it, then you can't get involved unless there's an opportunity for you to get involved in a fractional share percentage where you say, you know what, I don't have 500, but I got 50. I got 50K. Let me get 10%. And now I at least have an opportunity to gain 100% return on investment on that 10% of that real estate, which since 1963, we have seen median sales prices of homes increase by 2,354%. I rounded up that time. And he says that for investors seeking to protect their wealth in uncertain economic times, Kiyosaki's approach offers valuable insights into diversification and risk management. It's important to understand that his investment strategies may not be the right approach for everyone. You should always do your own research and consult with a qualified financial advisor, which I am not. I'm just some guy sitting here trying to get over this vicious cold and ignore all the pressure in my head right now as I share with you some of these articles and some of these stories of things that are happening right now in our world, in our country, in our neighborhoods, that have a huge impact on our finances, our economy, our paychecks, our money, our savings, our retirement. And since Kiyosaki discussed real estate, I need to share with you a little bit of a strange story. Now, granted, it's real, but it's not common. And it says, MoneyWise has shared that everybody's in panic mode. I don't know if I want to say everybody, but they're saying everybody's in panic mode. Ultra rich Americans have mansions on their hands that they can't get rid of. So they're renting out their luxury LA homes for as high as $150K per month. I don't think that you can say that ultra rich Americans have mansions on their hands that they can't get rid of, and they are renting out their luxury LA homes for $150K a month, after having said everybody's in panic mode. That just doesn't make sense to me. They're renting out these homes for what people would dream to have as an annual income in 1 month. Everybody's in panic mode. Yeah, I don't know about that one. I don't know about that one, MoneyWise. Now, real quick, mansion owners in Los Angeles are struggling to unload their luxury properties up against a sluggish housing market, a punitive sales tax, and a dearth of eager buyers. Multimillionaires in California's city have resorted to renting out their mansions for eye-watering sums. And it says that the pain points for wealthy sellers. It's interesting. Pain points for wealthy sellers. I do believe, one, this is a moot point, but it's worth discussing, that the housing market and investing in real estate is tricky right now. But I don't think it is the same for everybody. And the pain points of wealthy sellers is completely opposite of the pain point for folks who can barely get by and barely get approved. And I'm not going to go into great detail here now in this video, but I do want you guys to check out a video that I put up as an end screen for this video, because Chris is sharing loads of valuable information and real-time data on what is actually happening in the housing market, particularly in his market. But I do believe that he's going to begin to expand and venture out into the country as a whole. But one of the key things that he's pointed out recently is that the buyer pool is shifting, and the wealthy, the multi-millionaires, the institutional buyers, the smart money out there, they have their own problems and concerns, but it has nothing to do with housing affordability, right? It has nothing to do with interest rates. And we can see that from just the recent moves that Jeff Bezos has made to move to a 60 or 70 or 100. I don't even remember how many millions of dollars his house is on that private island in South Florida. I think he bought his neighbor's house too, just so he can not have neighbors. So, yeah, he's already tracking what's happening and what's going on in real time. And the pain points of wealthy sellers and everybody in panic mode, and also the idea that investing in real estate is the best move right now, all needs to be analyzed fully and dissected. And it's going to be a unique and individual conversation and decision for everybody, I think. I don't think it's a one size fits all. So go check out his video here next. And I appreciate you guys watching. Please smash the like button, subscribe. And until next time, you guys take care, be safe. I'll see you real soon. Bye.